Our first guest is Mr. Russell Rhoads, a PhD and associate clinical professor at the Kelley School of Business at Indiana University. Mr. Rhoads, good to see you. How's it going?
You been a long time. Hey, can I change topics on you real quick and follow up with a couple of things we're talking about?
Yes.
Okay. Well, you showed that NVIDIA chart along with the S&P 500, and then they disconnected. I thought you were showing a chart of what the market is predicting for the next rate cut, or for the rate cut in September, because it looks exactly the same. And when we drop down to the odds leaning toward a 50 basis point cut as opposed to a 25 basis point cut, the stock market hated that. And then we worked our way back up. So as you guys were saying, people are going to be keeping an eye on, and people are going to be talking about what they think is going to happen at the next meeting. I'm like you. I like to look at the odds. I would, if I'm a stock trader, I don't ever do anything in the bond market. I'm paying an awful lot of attention to what the derivative markets are saying with respect to September 18th. I think it's the 18th, because when it did drop down to 50 basis points, it was one of those situations where it was bad enough that they've got to cut 50, so it must be bad for stocks. And then they rebounded right in line with each other. So I would be paying close attention to that. And then finally, I apologize. I know we were going to talk about VIX and stuff, and we can. What I think is really funny today is NVIDIA is down and Salesforce is up.
Right.
Last quarter, Salesforce lost about 20% off earnings, and NVIDIA was up 9% off earnings. They're moving exactly opposite as they did on their last earnings announcement.
No, I like that you pointed that out. It's actually part of the reason I put Salesforce at the top of my movers today, because they've got a story and a role to play here this week too, as like a once heroic tech trade that's been very clearly downtrending. I don't think a lot of people realize the whole cloud sector has been steadily downtrending. It's like, imagine if you actually turned that around while the Mag 7 stuff is working. It could be huge.
Could be gigantic, to say the least. Plus, you got to assume they're very economically sensitive, and if you're seeing corporate layoffs, et cetera, that can't be a huge positive for Salesforce.
True. All right.
So sorry for the deviation.
Love it.
Let's go back to what we're doing.
I love it.
Okay.
The varied mind of Mr. Russell Rhoads. I'm happy to find out what's in there. At least when it comes to markets.
Don't leave it at that.
Russell, so all right, VIX kind of settles back into like 16. Does it feel like we're back to like average vol? Is this an average world?
It's like it's a little on edge, but I'm honestly shocked at the term structure right now, and that the September contract is at a slight discount. Now, I've been pondering that one all day, and Kevin kind of made a good point about it's pretty quiet. It's a couple of stock-specific things earlier this week. That may just be the volatility traders not thinking for the next couple of days they need to worry about a move out of VIX. But that September contract, it's at over a 2-point discount to the October contract, and October's at a premium because of the presidential election, and we expect volatility expectations to be higher a couple of weeks before the election. But with that 2+ point spread right now, if you just want to be prepared for a volatility spike, not necessarily predicting one, but be prepared for one, I think it would, if it doesn't come to fruition, if you own September and you're short October, that you won't lose a whole lot, unlike if you just bought September by itself and nothing were to happen. That September contract, again, at a slight discount to the index, typically on a pre-holiday week like we're in right now, it's the other way around. So Kevin may have answered a question for me there.
Sort of an anomalous thing. Right, Russell?
Yeah, absolutely. Typically, the spot index, it gets a little bit more of a headwind when we go into holiday weekends, but that doesn't show up in the futures markets. I've done lots of looking at the front month future over a 3-day weekend, and the same sort of headwind that shows up in the index doesn't show up in the future. And that's another reason I'm a little perplexed with VIX just with a 16 handle and the spot VIX being a little higher than the future. The market really does not expect anything volatility-wise between now and the Fed meeting, and September VIX expiration is actually the morning of the Fed meeting. So if you think that's when we're going to get our volatility, you're going to be looking at the October contract as well. But any surprise, much like we got the first weekend in August, I really feel like that big move was accompanied by nobody was expecting it. I didn't feel like there was any rush to be long volatility going into August. I felt like September was going to be the month. And the more the surprise, the bigger the move that we get to the upside for VIX.
That's kind of an interesting thought, that maybe we just sort of fast forwarded somewhat of the kind of inevitable by like a month, because there was just sort of some tension in the market basically since the July CPI report, when we had this big rotation, bailed out of all the winners. And then maybe realize this isn't a great thing, but it kind of forces the Fed to move up a month, perhaps, and bring that clarity to us. It's an interesting way to think about it, because if that's the case, then it could be an explanation for how you can have a massive spike in vol to not lead into like any major vol regime.
Exactly. And I have not run the numbers, but I've been watching VIX for a little while. And I'm almost certain that this is the quickest move below 20 after moving above 40 intraday. It's got to be. Yeah. I mean, I remember the similar thing happening, and it took about a month, and everybody was shocked at how quick that happened. This one happened in like 7 or 8 days.
Yeah. You're talking about Volmageddon. What do you think, Russell, because we haven't spoken since the event, what do you think basically is the most comparable kind of event to what we got? Or is it just because of the retreat speed truly unique?
I think it's, when we had the little flash crashes that were like a one-off that everybody brushed off almost instantly, I almost equate it to that, because we got one data point that made everybody a bit concerned about a 50 basis point cut instead of a 25 basis point cut. Within days, cooler heads started to prevail, and the market shifted back to just a 25 basis point cut, which I feel like the market interprets anything more than 25 basis points as the Fed suddenly playing catch up, and maybe they've gotten behind the curve. I saw somebody on one of the business networks calling for an emergency 50 basis point cut on August 5th. Is that not that's ridiculous.
That was getting a little crazy there.
Yeah.
But it seems like to some extent, Powell's kind of left the door open to that if the data go awry. I mean, he seemed like a man pretty ready to pull the lever.
Yeah. No, we're definitely going to get a cut, and I think the Fed would prefer, and I think the market would prefer, a 25 basis point cut as well. I do feel like if that number moves back to closer to 50 basis points than 25 basis points, and I've got it. I probably use a little different methodology than you, but I've got 32 basis points right now, which means it's leaning more toward 25 than 50. But if we get some sort of inflationary type number this week or next week, I wouldn't be the least bit surprised if if you can pull some inflation out of the employment number, which we get next Friday. If wages look like they're going up, et cetera, it's very possible we could spike to 50. And if it looks like we're going to do a 50 basis point cut, I don't think stocks are going to react very well to that, because I feel like that's what drug us lower before.
Fair enough. Yeah. All right. So you still see SEP as basically a more volatile event likely than October. So that kind of vol dynamic, I see the argument for that, for maybe entering long vol through September. And your idea is basically even going as far to like short October vol to play that spread even more.
Yeah, I feel like that spread over the last 4 or 5 years has stayed very consistent. October has been at a bit more of a premium to September, especially in the election years, but the spread has remained about the same. I looked at it over the last 4 years, and the spread varied anywhere from 2 points to 5 points. But then when I would fast forward to a couple of days before September expiration, the spread was pretty much the same as it was before. So if you bought September and you shorted October, on the possibility that we get some sort of volatility event in the next 3 weeks, if it doesn't happen, I don't think you're going to lose very much on that. And I know it sounds kind of silly to enter a trade with an outlook that we won't lose that much, but I feel like when you're trying to put on long volatility trades, that's one of the ways that you want to approach it. If I'm not right and we get and VIX starts moving lower, VIX starts moving lower, the October contract will move down, and the September contract will move down as well, and probably move down in sync with each other. But if we get a volatility event, I think September would move to a premium to October pretty quickly.
Very well said. Trying to get exposure to vol cheap, right? And then especially if you've got stocks, it's like, okay, so my speculative vol hedge didn't pay off, but I'm happy that my stocks are doing fine. So it seems like there's a lot of ways that, it makes sense. Russell, hey, does the vol VVIX right now sitting still like at 100 or something like that? Like, does that does that add to your point here a little bit?
What's funny about VVIX, I actually put a trade on using September and October options based on what I just talked about, getting long. So I bought an in-the-money call, and I bought an in-the-money October put to benefit from whatever direction they move together, with the hope that maybe we get that September spike. The implied vol on the call that I purchased, I know that there's a different term structure with respect to VIX, but that in the money put was really expensive. So I do think that a good portion of what you're seeing with VVIX here relates to the October options as opposed to the September options. When you have a volatility index, you have two different expirations that feed into it. And I haven't looked at maybe I'll take a look at the at-the-money straddle on each of them, but I would bet, I'll bet you a paycheck that the implied vol of October options is higher than September right now, just because of the what we're looking at with the November election.
Love it. All right, fun stuff. Very fun conversation, very useful. Love the insight in what you're doing. The Professor Trader. Thank you very much, Russell Rhoads.